like Trump or not, this is about trading here, about making money and trying to anticipate how people are going to be reacting to the news. And these really should drive Middle America further towards Trump. And yeah, that image is like, I saw the image and we're like, wow, he just won.
Hi everyone, welcome to Bits and Bips, exploring how crypto and macro collide 1 basis point at a time. I'm your host, James Seyffart, TradFi Archmaester, Lord of Bloomberg's End, here with Alex Kruger, Kruger Macro of House Asgard, Protector of the Realm, and Joe McCann, Lord Commander of Asymmetric and Master of Bonk. We're here to discuss the latest stories in the worlds of crypto and macro news. Just remember that nothing we say here is investment advice. Please check unchainedcrypto.com/bitsandbips for more disclosures. Also, joining us today is Jack Platts from Hypersphere. I'm going to let him introduce himself a little bit.
Sure. Thanks, James. I'm Jack here from Hypersphere. Started the firm in 2020. We've launched 4 funds. It's a digital asset management firm, predominantly investing in tokens at the infrastructure and earliest stage through public blockchain networks. We support networks through a series of venture funds and an open-ended hedge fund. So that's a little bit about me, and thanks for having me on.
Great. So let's get into what is arguably the biggest news of anything that's happened in a very, very long time. We're recording this on Monday, July 15th. So this just a couple of days ago, I guess former President and potentially future President Trump was shot at during a speech, hit his ear. Does this settle the election? Do you think that all the images and what we're seeing coming out of this this situation, does this settle the election, Joe?
Yes. It's over. It's a wrap. Listen, look, I mean, irrespective of your political leanings, what happened on Saturday, there's no place for that kind of political violence in the United States, period. I would say anywhere, but certainly not in the US. And it's abhorrent that it happened, period. Even if you despise someone like Trump, right? It shouldn't happen. I think that the perception of Trump now has gone up dramatically. Now, you could see some sympathy in the polls, et cetera, surviving an assassination attack in the in like the Rocky Balboa kind of way that he did. I mean, it was truly unbelievable. I think I probably speak for everyone when they saw that. They were just could not believe their eyes. As an investor and a hedge fund manager, the first thing I did after getting the news was check the markets because that's my job. And in the prediction markets, one of the things that I noticed was on, so there's a website called Predict It that has nothing to do with crypto. It's been around for a long time. Yes, there's Polymarket and Hedgehog and these types of prediction markets for Web3. Predict It saw record buy volume on the Trump contract to win the election. And, I remember we had a guest on previously that really favored prediction markets because folks that tend to trade in those markets are very good at these types of things. And his chance of winning is now 2 out of 3, or at least it was on Saturday when the event happened. But the amount of volume that came in was pretty significant. The other thing, though, and I think that this is probably as it relates to price action in crypto and what it means. As I was watching all this unfold on Saturday, I contacted my trading partner and we were having a conversation. The price action and this sort of, call it black swan, left tail, idiosyncratic event reminded me, totally different scenario, of March of 2023 when Silicon Valley Bank had subsequently been drained of all of its funding in 48 hours, a denial of service by withdraw. And that weekend, they were putting together a plan to effectively shore up SVB. And the price action over this past weekend with Bitcoin specifically was almost identical to what was happening the weekend that they were looking to save SVB. Now, let's be super clear. These are totally different types of events, but the price action was consistent. And so, it dawned on me that given that we've had basically, I call it like 2 straight months of programmatic selling in the markets, and we'll kind of touch on that in a little bit, this was a flight to quality trade, meaning one, folks were looking at an assassination attempt as clearly something scary and terrifying to, I think, a lot of people in the United States, rightfully so. And when people tend to get scared, they tend to invest their money in flight to quality assets. just like when people got scared about SVB and whenever there's stress in the financial system, people tend to flow into things like gold. And well, of course, Bitcoin is digital gold. It's easily accessible, and it trades on the weekend. And so you saw that happen. And then I think the second thing, which Alex will probably touch on with respect to the Trump trade, Trump is clearly pro crypto, and we've talked about this on the last pod. In the case that even, if he's lying about everything, let's assume he gets elected and he doesn't follow through on anything crypto related, the narrative and perception of what he could do is very, very influential to price. And so if you look at risk assets more broadly, you saw a huge steepening in the 230s curve today. That's Trump trade. That's not even interest rate specific. That's just Trump trade. You saw things like Bitcoin and other forms of crypto rise over the weekend and really continue today since the equity cash open at 9:30 Eastern time. So I think that with take like sentiment in the gutter, 2 straight months of programmatic selling, there's now this catalyst, a tragic one, but a catalyst nonetheless, that is kind of bringing people back to market to say, hey, I think Trump's probably a shoo-in for the president. He's pro-crypto. It's a flight to quality asset. And we've been, oversold, sentiment down. It's probably time to get long. What do you think, Alex?
I think it's spot on everything, but one thing where I disagree, which is the flight to quality. The way I see it is this is just a Trump trade, and we've been talking about this, and quite a few people in crypto, maybe not the majority, but quite a few people been talking about it as the Trump trade. So basically, when we saw this news, a lot of people just started hitting the bid. The one thing that I found was interesting on the PA was that it was kind of slow to take off, which I'm pretty sure threw off quite a bit of traders. But yeah, aside of that, that's the only thing I'm in disagreement with what you said. Everything else I think is spot on, from extreme bearish sentiment on expectations of GOX, on Germany selling. The chart completely broke down, and basically bearish takes, or if we're going like way lower, they really became deafening. And then we go on to the altcoin side, and actually everything was so bad to the point that the most altcoins literally reversed everything we saw, all the gains of 2024, in many cases even all the way till summer of 23. So basically no bull market. Yeah. Anything, Jack? Any thoughts?
It's incredible where we are, and it's hard to think 7.5 years ago, whenever November 4th, 2016, when Trump was getting elected, the price of Bitcoin on his election victory went from $700 to $600, finished the year off at 1,000, and then finished off by the time Joe Biden was sworn in on Jan 20, 2021 at over 30,000. So last time Trump was sworn in, we were about 100x lower on Bitcoin. So, a lot of us were still in crypto at that point, but zooming out I think is important. In the past 2 months, it's been the supply of the ongoing selling, systematic selling that Joe pointed out, with Germany and the anticipation of Mt. Gox distributions and so on and so forth, being weighed against a lot of the longer term bullish regulatory environment, with SEC dropping cases, with Trump now going from in the margin of error for winning in November to being the overwhelming favorite, kind of in things at the Supreme Court level, like Chevron deference being overturned. Those are all kind of now finally in the driver's seat, and some of the selling is finally done, at least on the German side, right? They went from something like $3 billion to zero within a month. So with GOX coming at maybe a couple multiples of that, we'll see a little bit of fighting still in Q2. But a lot of people had come into Q2 thinking, hey, this quarter is going to be, if we can end at scratch on the quarter, then we're in okay place, because we just did a lot of work in Q4 of last year and Q1 of this year. So, 3-month break, while difficult for the attention span and patience level of the average crypto person, is is a small price to pay, I think, for a big win for Trump in November, and then some of the regulatory pieces being slowly taken away from the regulatory agencies and given back to the judicial branch where it belongs.
Yeah, I would add the two things that I took away was some polling came out that was done even before this happened, and pretty much all the swing states were showing that Trump was leading in the swing states. And then after the assassination attempt on Saturday, I have to assume these numbers probably get better for Trump. I mean, Arizona, Georgia, Michigan, North Carolina, Nevada, Pennsylvania, and Wisconsin. Recent polling shows that they're leading there. And what's important there to me, like the thing I noticed from it is like, if you look at the polling for like Senate, the people running for election in the Senate in those same states, the Dems are ahead by even more than Donald Trump is ahead as president. So it shows that like this is almost more just like it's a Trump specific, Biden specific thing. It's not just to do with necessarily the politics. The other thing I would say is I was taught, obviously this assassination attempt was a topic of conversation at the office today. And our interest rate strategists who I was talking to, like some of them were like, yeah, one of the first places I looked was I looked at the price of Bitcoin because I knew it was the one thing that was definitely trading. So when you have people who aren't really necessarily in this space, they're like, they went to Bitcoin to see what was happening, what the reaction was. And my first place, Joe, was I went to look at Predicted and Polymarket, obviously, and I saw the stuff that you saw. So that's all I pretty much have to say on that topic.
The one thing I'll add is that, you know, you mentioned the senators in these various states are leading on the Democratic side. There is still a risk that, you know, people may say that they want to vote for Trump, but why would they then all, you know, they're just going to vote for Trump, but then everybody else down the Democratic Party line, they're just going to tick all those boxes. There is a scenario where people are, which was the opposite of Trump's original campaign, embarrassed or not willing to suggest that they're going to vote for Biden because for whatever reason. So I do think that there is, you know, some nuance in that polling data, which is one of the reasons why I prefer the prediction markets. It's nothing's a silver bullet. No one can predict the future, but the prediction markets were pretty damn clear. And with I think the VP nomination that just came up, and James, I'll let you introduce this topic. I don't see, it's very difficult probabilistically to look at an outcome that Trump isn't the president next year.
Yeah, I mean the chopping block, our sister podcast, and Laura was actually a guest. The most recent episode, they spent a lot of time talking about these prediction markets, and I tend to agree. The prediction markets I think are so much better than polling and better than the media because people, like for the most part, are putting their money where their mouth is and putting their money behind what they think is going to happen. Whereas obviously there is some bias in there. Like if you want somebody to win, you might be more inclined to put money. Like I know when I bet on my favorite sports teams, I do tend to put money on those teams, even if the odds aren't necessarily the greatest. It just gets you more involved, but you kind of are, you know, invested in what's going on in the election. If you're a U.S. citizen, really anyone is invested in what's going on here. But yeah, I'm with you. The prediction markets and what we're seeing across even some of the legacy stuff like Predicted, but Polymarket too is pretty impressive. But yeah, let's move on to the fact that today, I mean,
before James, sorry to interrupt. One thing I want to add there, which I think is interesting. When I fully agree on picking the prediction markets as my go-to place for election odds. Now, that usually triggers a criticism from people saying, like, those aren't even polls, those are prediction markets. Or another one, and this one actually I think is somewhat valid, and I would like to see data on this, which I haven't seen, which is the perception that prediction markets, they lean right. So there's going to be a bias on the data just basically because of who is voting, especially if we're talking about Polymarket. It's crypto people, right? And crypto leans right. I'm pretty sure that we do lean right on average.
And you can see that difference between like the Bloomberg likelihood of Trump getting elected and the Polymarket likelihood is like 70 versus 63%. I checked yesterday on Sunday.
Yeah, Polymarket still at 70, 71. The other thing I wanted to say on Polymarket, actually, for example, I use Polymarket as a confirmation that I'm not going crazy for adding BTC longs on when it happened. Definitely, there is value in there, in my opinion.
This is the Bloomberg Trump Biden. This is favorable, and then they use Predicted actually for the Bloomberg markets. for the most part. And obviously Donald Trump is way up on here.
That's a stunning chart.
Yeah, I mean, just look at the rise there in the fall. I mean, I think this is June 23rd, so that's a debate. You can see the drop off. Obviously, a little bit of uptick here on Biden, but
yeah, and I mean, one other thing about this, the Trump stuff is with the assassination attempt, like the imagery is iconic. Even if you despise Trump, it doesn't matter. The imagery is unbelievable, and Trump's reelection team is very good at memes, propaganda on the internet, and they are going to put that photo of him on every major TV show and all of their, distributions and content that they create until he gets elected. I mean, it is that powerful, and that story carries a lot of weight. And I think that this is, potentially one of the reasons why he announced the VP nomination earlier today on Monday. This guy, JD Vance, I think from a crypto standpoint, it's pretty clear the guy is pro crypto. He's got some incredible tweets over the past few years, I should say, as well as personal holdings in the six figures of Bitcoin. So, I don't know, Jack, if you had a chance to look at the JD Vance VP nomination, but I'd love to kind of get your perspective on what it could possibly mean for crypto to have such a pro-crypto VP behind Donald Trump.
Well, crypto and AI and some other core technologies that are exponential and exciting and that have been regulated out of near existence in a lot of Western countries are a big part of the RNC agenda, which is already a big switch from the past 3.5 years. And then to have JD Vance, who's started a VC firm, he's deeply connected with Peter Thiel being his biggest backer. Peter Thiel obviously looks prescient once again for in 2016 backing Trump and famously saying this time he's not going to back anyone. It turns out he's going to have a close friend and mentee in the White House, perhaps with JD Vance. So it's obviously just a continuation of the pro crypto theme that has basically been a catalyst for the market since Mar-a-Lago about 2 months ago, where Trump came out in a big way for crypto. Every domino to fall since then on the political regulatory side has been positive, and it's hard for me to even listen to analyses or read them from pre-Saturday, since with the assassination attempt, it feels like everything is now changed, because typically the market prices in a election victory for a new administration closer to the election night. And here we are 3 or 4 months still before the election. And you're already seeing the difference between a likelihood of 52% chance of winning versus 70% chance that, the market can actually price that stuff in a lot sooner.
Yeah, on the imagery you were talking about, Joe, I mean, that one image of him with his fist up and the flag over him, like, for the the guy knows what he's doing. Like, once he realized he was fine, he knew exactly what he was doing and posing, and that was completely a political decision. And that was the first thing I said. I'm in a group chat with like 20 of my friends, and we were all talking about it, and we were joking about different things before we realized how serious it was. And the first thing I said was like, this image is going to be in history books for our kid, like your kids down the line. Like, this is going to go down like as something pretty remarkable, and how close it was to being something way more tragic.
That image, when I was, that night, I was thinking about it, and it made me think of two images that are really iconic and historic. One is the Iwo, what's the name of this? Iwo Jima. The flag, the American soldiers planting the flag. It really felt like a combination of that and Muhammad Ali. That picture where I think he's over 4 man. It's like incredible picture. It's like those two things combined, and again, it's as we've been saying, is like Trump or not, this is about trading here and about making money and trying to anticipate how people are going to be reacting to the news, and these really should drive Middle America further towards Trump, and yeah, that image is like, I saw the image and we're like, wow, he just won. This is it.
Couldn't have done it better.
Okay. Let's move on to that's enough politics. I don't know, this podcast isn't meant to be a political podcast, but I mean, you kind of don't really have a choice here. JD Vance, probably very good for crypto. The one thing before we move on, I would say that Trump is supposed to speak next week at the Bitcoin conference in Nashville. I'm assuming that's still happening. It looks like he's at the RNC now, so he didn't hold back. He didn't let this hold him back even a day or two. But he should be speaking at the Bitcoin conference in Nashville next week, so that'll be very interesting. I will also be there speaking on theoretically the same stage as him at some point long before he is. But moving on to a little bit more macro, let's talk some interest rates. Right now, last time we kept talking about how the odds of September were creeping up. That was like basically a theme every time we talked about macro. I'm going to share right now for those who are watching this on YouTube. Right now, it's basically pricing 100% chance of a rate cut by the September 18th meeting. So they're pricing a 25 bips rate cut by September 18th. That makes sense to me. I said last time September makes sense to me. Joe thought July was still on the table. July is only about an 8.5% chance right now, but Joe's a little more bullish than that. So I'll turn it over to Joe to get started here because I know he has a bit of a strong opinion on a tail event here.
Yeah, look, I mean, I've been pounding the table on this since April, basically, that the Fed's cutting rates. The question is how much and when. And we had a negative CPI print last week. Negative. The first time in years we've had a negative CPI print. And yet the rate is at 5.5%. And so if you just look at that in a vacuum academically, that doesn't make sense. You should not have rates that restrictive when you're having a negative CPI print. Your inflation's clearly coming down. So last week was a really big deal as it relates to the September cut. I would say it's a wrap at this point. The reason I still think that there's a shot for July is the following. One, you had an uptick in unemployment, 4.1%. Two, you've got a negative CPI print. But three, tomorrow, so Tuesday, by the time this airs, we will actually know the answer to this. You have retail sales, and there is a concern that the economy is slowing and that the Fed has held rates too high in a restrictive manner for too long. You mentioned it's about an 8% chance right now of them cutting in July. And that's probably about right. Sub 10% is kind of where my head has been for quite some time. But if they are all of a sudden, if the retail sales number, for example, is really weak tomorrow, you will see that this week there's 10 Fed meetings, or excuse me, not Fed meetings, Fed speeches. 10. That is a lot for 1 week. And next week, they go in their blackout period before the FOMC meeting at the end of the month. And so if the retail sales number is weak, what we should see is a signal coming from these Fed speakers throughout the week as to whether or not they're going to telegraph a July cut is on the table. And my view is if they don't cut in July, they're going to have to cut 50 bips in September, because they'll be so far behind keeping rates that restrictive for that long with this type of poor economic data coming in, or certainly inflation coming down, employment ticking up. And to be clear, 4.1% isn't a horrible number, but it's the trend, that the fact that we're actually starting to see weakness in employment. We're seeing weakness certainly in inflation, which is a good thing. But if the economy is slowing from the consumer, consumer makes up roughly 2/3 of GDP in this country. If retail sales do come in soft, I think there is a strong case to be made for 25 bits in July, and then it can carry that forward into September. If they don't do July, they're going to have to do 50 in September, in my opinion.
Alex, any thoughts? You disagree?
Yeah,
You agree?
I think it's going to be September. I mean, I can see it. Let's say I would put odds of that happening, and I'm going to make this up because I haven't looked at any models, but I'm gonna say odds of July cut, let's say 20%, and September is a done deal.
50 in September?
I think it's gonna be September.
Do you think they'll do 50 or 25 in September?
I think that this is the other thing that is very important to discuss, which is I think it's going to be 25 in September. And in fact, if it is 50 in September, I would be concerned that the market may interpret that as the Fed actually being having their hand folded, and we get a risk-off reaction out of nowhere. That's the thing I'm concerned about. If we see 50 bips in September, I think is very real. It can happen. So for me it's 25, but I'm concerned about 50 in September, to be honest.
And just remember, September is the last time that the Fed has a meeting before the election.
Yeah, I'm not very big on that. I don't think the election actually affects very much the policy short term. To be honest, I know it's a big thing. People likes to talk about. It's I think it's more tied to beliefs in conspiracy theories. I haven't seen evidence in my entire life of the Fed affecting changing their behavior around presidential elections. To be honest, any thoughts, guys?
Yeah, I mean, dude, that's the black swan. I've only seen white swans. I could never see a black one. They've only had this behavior their entire life.
I mean, we need something really bad. I mean, we'll get housing data also, I think, next week, or actually that's this week. We have another 2 months. I think you need something really bad showing up in the data for them to go 50 bips. I'm staunchly of the opinion I think we're going to see 25 bips in September. I'm not an economist. It's actually our rate strategist who's been calling for November for the last few months is basically on the line now between November and September. They haven't made an official call, but their call up until the last couple of weeks has been they still thought November.
On that note, just to be super clear, and you know, maybe I'm just talking my book here, but pretty much every investment bank on the street has said more or less 50 bips is the max that will be cut this entire year. And then today, Goldman's, I think
Goldman.
Yeah, Goldman's guy came out and said, I forget, Hatsius or something. I always mispronounce his last name, but he said he sees July on the table now, right? Like, so they've been saying like, oh, they're not going to cut it all, and then it's going to be only 50 bips for the entire year. To wait a second, all of a sudden they may be cutting in July. It's like, what, like how accurate or how valuable is this type of information when they're flip flopping this like intellectually convex concept over and over and over again? It just, to me, it seems pretty clear. The Fed has been saying for months that they want to cut, that they need data to support that. The data is here. Now, the question is, have they been too late and the economy is slowing such that they either need to do July or they need to do a maintenance cuts of 50 bips in September?
Yeah, I mean, I think we're all like we're picking at the minutia of details here. I think we're all, for the most part, we're kind of in agreement, which is less fun for a podcast audience. But I guess I'll turn it over to you, Jack. We're all kind of in agreement. We're going to see 25 to 75 bips of rate cuts this year. I think 50 to 75 seems more likely. What does that do for crypto markets? How are you guys thinking about rate cuts? Do you think it impacts things at all? Like, how are you guys looking at it?
On balance, rate cuts should be helpful. I think the context in which the rate cuts are being done is obviously important. If it's because of the economy crashing, right? It's different than if it's kind of these safety cuts because inflation is falling a little bit faster and there's still real growth in the economy. So how things are looking now is rate cuts would be more in the latter camp. The financial crises, bank crises haven't been allowed since COVID. If there's ever an issue in the regional bank crisis or anything like this, there seems to be a government intervention right around the corner. So, for that reason, the left tail is cut. I don't think it would be a big deal if they cut 25 in September or 50 in September. The point is that we're done tightening, which was a concern in like the March, April timeframe with inflation picking up in the first couple months of the year. Now, we went from 6 or 7 cuts to start the year to, are they going to hike this year, to, somewhere in the middle, which was broadly in line with what the Fed said they were going to do at the end of last year. So from that perspective, it looks kind of like it's smooth sailing on the monetary policy front or, the macro front.
Joe, Alex, you agree, disagree?
Yeah, I largely agree, and my view still remains the same. I agree with Jack in a lot of cases here. The global liquidity cycle has not even gotten close to topping. Q2 historically has been, things tend to slow down because of tax receipts and TGA, and there was RRP, things that were affecting, like I would say certainly US based liquidity. China has a real problem, and they have not been able to defend their currency, and so they either need to, there needs to be some form of devaluation there. That's not great for global liquidity, but we're starting to see green shoots of global liquidity start to tick up even in the first couple of weeks of this year. And with rate cuts coming forth with the Fed, just like with their tightening cycle, that was a very much a follow the leader, almost coordinated plan by global central banks. They're going to do the same thing, and so that it is critically important for the Fed as it relates to liquidity to cut rates. But if it's a coordinated effort globally, you should actually see liquidity pick up elsewhere, and so there is this sort of almost one-for-one correlation between the global liquidity cycle and the price of Bitcoin, which is inversely correlated with things like the dollar index. And so the dollar actually got smoked last week on the CPI news. And when you cut rates, the value of the dollar tends to weaken. So from my perspective, again, it's like bigger picture, look at global liquidity, and then kind of dive into the details there. Fed's cutting rates, then you've got a coordinated central banks cutting rates, dollar weakens in theory. It should anyway. And that's all very positive for Bitcoin. I mean, in kind of like this very like rudimentary sense, right? Like right now, if you have dollars and you're not living paycheck to paycheck, like you probably got them in some T-bills, you probably got them in a savings account, you're earning 5 to 5.25, whatever it is. Well, if those rates start to come down, where do you think that money's going to go? Right? It's not going to just flow. It's not going to just sit in T-bills. If the price of T-bill, the yield on T-bills are starting to come down, it's going to chase risk. And so there's an enormous amount of, I saw something last week from BAML, enormous amount of the treasury purchases for T-bills are basically all retail. Not all, like, it's not that all T-bills are retail, but out of the things that retail buys, an overwhelming majority of that is in T-bills. They're not buying 10 years or 30s, they're buying T-bills. And so I think as those rates come down, those retail investors are going to look for the next thing. You saw, the Mag 7 last week with, the NVIDIAs and NVIDIA, Amazons, Teslas of the world, really a monster rotation into value. Maybe there's something to be said about this Bitcoin trade also picking up steam with something like that as folks are moving cash out in a rate cutting environment, looking for what could be the next momentum trade. It's probably something like crypto, at least to some extent.
A quick question on that. That YAML statistic about retail, are hedge funds classified as retail in that?
No, this is their private wealth management group.
Wow. So people are literally just like going on to
treasurydirect.gov. What a lovely website. Yes, they are going through that pain.
That's crazy.
Guys, I'm looking at a chart here. Basically, I forgot the sample size, but it's a chart basically showing that when cash yields, so short-term yields, go from basically 5 to 7%, where we are at right now, the allocation to equities goes from like 50s to 60%. So this is not just a narrative. This is a real thing. Of course, it's also logical, right? As rates go down, money flows back into risk, and that also means Bitcoin, and it means crypto and shitcoins, and you name it.
That's right.
Like it or not.
Yeah, I mean, we're also at record levels in money market funds too. So I think there's a lot. The question is like, how much of that is like people treating like savings versus is it just in a money market account in their brokerage and they're holding onto it while they're getting 5% rates, and if all of a sudden they aren't, are they gonna go and put it into, I don't know, equities or crypto potentially? Who knows? There's a lot of people with a lot of strong opinions on that. I don't have a super strong opinion on it. Anybody with anything else for macro, or should we move on?
Well, I think the last piece with macro, and we can segue into your topic, James, with the potential for money coming out of things like money market funds, T-bills, et cetera, and hopefully chasing for all of us, hopefully chasing things like crypto. How much of that's going to end up in something like an Ethereum ETF, James?
Very, very good transition there, Joe. Yeah, so we've been talking about, I feel like every freaking podcast we've recorded here, we've talked about the potential for Ethereum ETF, maybe not the first one. But we finally we're hearing rumblings from different of our sources today. So we broke the news today that it looks like the SEC wants everyone to submit their final documents on Wednesday of this week. So that's Wednesday, July 17th, I think. So at some point, either on the 17th or some point this week, we should see a bunch of these prospectus documents get filed from these 8 different issuers, and they have to include all the information. So we'll see where the fees are going to be. My expectation is they'll be roughly in line with what we saw for the Bitcoin ETFs. We know that Van Eck and Bitwise are definitely doing fee waivers right now. I would expect probably most of them are going to do fee waivers. But they're likely to launch, it seems, on Tuesday, July 23rd, ironically enough, 2 days right before the Bitcoin conference down in Nashville starts. So these things are going to be live and trading as everyone is, the Bitcoin maxis and including me, are down in Nashville. So yeah, it looks like these things are going to start trading July 23rd, absent some huge changes or some unforeseen consequences. But yeah, we're expecting them to begin trading next week, which is it's about damn time, to be quite honest. Like these things, if you look at some of the most recent updates, I think they said this on the last podcast, like they were so minuscule. And then they just took over a week to get back to the issuers. Like with some of the other stuff that they do, it's like you send it in and they get back to you the next day, particularly if there's not that much to do. And the SEC was just taking their sweet old time on this one. So they all filed July 8th of last week. And they took a full week to get back to them and basically said, yeah, these are good to go. Just submit with all the final information and be ready to launch next Tuesday. So we'll see if that happens, but it's finally here.
Well, now that we know that it's finally here, I mean, I'd love to get Jack's perspective. I mean, because me, you, and Alex have talked about this ETH ETF, like you said, every episode, because there's always some new thing about it, right? Jack, from your perspective as an institutional investor and a long time, crypto advocate, how do you think about the ETH ETF from a inflows perspective, or its ability to be accessible, the fact that there's no staking yield applied? Like, what is your overall view, bullish, bearish, neutral as it relates to Ethereum ETF launching next week?
The direction of travel is extremely bullish for the industry at large, because there's the original, or the first altcoin that's been solidified as the second pillar after Bitcoin is now getting a institutional bid, and so over time that will just lift all boats. And we've seen the Solana filing for the ETF, and under a Trump administration, and there would be potentially an approval of that. You guys have said on this podcast as early as end of next year, 2025. So the rate of travel is really clear. I've seen different analyses that say, okay, there's 1.5% of Bitcoins outstanding in the Bitcoin ETFs. So will Ethereum be more or less than that? I think there's good reasons for both arguments of why it'd be more or less, because there's not staking, because it's going to be potentially less known, because so much of it is already staked or restaked, or in some liquidity sink somewhere on the network. So I think so long as it's not a flop, I think it's bullish. I wouldn't overthink this. A lot of people have just been overthinking a lot of the ETF news as looking at daily inflows and all of this, but it's incredibly positive for the space. It's hard to underestimate how bullish it is with ETH, and then potentially Solana. Eventually, maybe all of these will be trading in one way or another through brokerage accounts.
Before I let Joe and Alex jump in, I just want to echo what you said, because this might sound like counterintuitive, but for me, somebody who looks at the ETF flows and trade, like the people that are so fixated on exactly what's going to happen and how much money is going to come in, like you guys need to chill. Like it is what it is. The money, there will likely be money that comes in. They are not the market. They do impact the market, but they are not the sole market. And I agree with you, Jack. Honestly, I would even go so far as to say, even if they are a flop, even if they take in less than $1 billion in net inflows in the first 6 months, I mean, it's still a net win for Ethereum over the longer term, because it's still an area where institutions and retail investors and advisors can allocate it. So just you're creating a new bridge to Ethereum for traditional financial capital. So I we can get into our predictions, but I won't give my predictions. I'll let Joe and Alex chime in here. But I just wanted to say that, like, people need to relax about exactly how much money is going to come in and what these flows are going to do.
How many, James, how many DMs you get a day of people asking you about it?
Yeah, it's DMs, comments, replies. Honestly, a lot of Bloomberg clients care very, very much about this, exactly when they're going to launch and things like that. So it's good to finally have an answer on that front.
Yeah, I share your sentiment, Jack. I mean, overall, I think bringing the Ethereum ETF to market is net positive for crypto in general. That way, it wasn't like a one-trick pony with Bitcoin. And also, I no surprise, I do think that other ETFs are going to end up launching, likely Solana next. And it kind of raises the question of, is this part of a bigger trend of this sort of ETFification of crypto assets, and particularly ones that are, heavily traded. Solana, of course, is the third most heavily traded crypto asset out there. And it does make a lot of sense that it would be potentially one that would come next. This doesn't mean, though, that others can't or won't. And also, I've talked about this in the past. BlackRock has flat out come out and said that they plan on tokenizing like damn near everything. And so there's a lot of fee money to be made by tokenizing a lot of these assets that are just simply unavailable to folks that, say, don't have a Coinbase account or a Phantom wallet. So I think, again, directionally, this is super positive. I actually hope the Ethereum folks get a solid win out of this one, and we'll see who's next, because once the news is already here and it's live, yeah, we can pontificate over flows and this and that, but it's always what's on to the next one.
It's not just who has those accounts. Like, some institutions, some people literally are not allowed to invest in the direct asset. And by wrapping it this way, it allows you to get access to it. So like there's that whole other world of like capital that, like, theoretically, I mean, yes, theoretically you could change the documents and make it so they could invest in these things at some point down the line. But like wrapping it in an ETF wrapper, putting it on the TradFi rails means that they don't have to go through that long, arduous process, and they can just click buy in their brokerage account.
No, I just wanted to say that I was actually surprised that I am surprised still that Solana hasn't outperformed by a much larger amount. I mean, it's kind of like in line with, it's slightly above BTC, in line with ETH. I'm talking about since the Trump news, right? Because the one of the first thoughts I had when I saw when it settled after the assassination attempt was like, okay, this is guaranteed a Solana ETF coming next year. And a lot of people had the same thought, right? So I would have expected more of an outperformance there.
Well, I mean, on a relative value, it is not by much. It didn't have like a giant gap up against Bitcoin or Ethereum, but it has over the past couple of days since the assassination attempt outperformed ETH and Bitcoin. And to me, it's actually not a surprise that it's slightly outperforming, because this is the beta in the market that you can get. And it trades, the realized vol on Solana is what Bitcoin used to be. And so, punters love trading this asset relative to something like Bitcoin and ETH. And I think that shows up a little bit in the RV there.
Yep. Changing subject slightly, something I wanted to bring up that I was forgetting. It's back on macro and more like equities is market breadth. Basically, market breadth is number of stocks that are participating in the move in the market, and it's something that last month, especially last week, actually last year, and especially last week, it became deafening. Basically, the view there, what people believe is that if market breadth is very low, that is extremely bearish. It means that the rally is fake, to put it in a way. And we're due for a large correction, and two thoughts there. One is basically the counter to that view, which is basically market breadth. When you have such a move being driven by AI and investment in cloud and data centers and etc., market breadth is supposed to be low, because the story is AI. That's the story. So like expecting that the rest of the economy to perform more or less in line with AI, given that what's been happening, it's foolish in my opinion. That on one hand, and on the other thing is this changed on Thursday with inflation print, where the Russell had a move of over 4.5%. The Russell is a small caps index, and at the same time, the Nasdaq dropped 2%. So it was like a really remarkable divergence between large tech and small caps. So we kind of like getting that breath back in. So people who are bearish are losing an argument that for them was important. And the other thing is Trump. You could argue that actually part of the Trump trade is bullish for small caps because of basically lower taxes, the regulation, and the things that he would be pushing would be all in more favorable. Not saying like it drives a trend, but it's more favorable in relative terms for small caps and large tech. And we can actually see this price validating this view. If you look at what happened today, again, the Russell is up 2%, and Nasdaq is 70 bips. The S&P is 0.4. So this is a real thing. And if small caps outperform, market breadth improves by definition. So this is something very positive, I think.
Yeah, one thing I'll add on to that, I saw something from Bank of America's global research team put out last week as it relates to market breadth. Q2, so when we get earnings for Q2 in the current quarter, Q2 is expected to be the first EPS growth quarter for the other 493 in the S&P 500. That's a huge change because it hasn't been that way for a number of quarters. Now, couple that with the CPI print, which, let's be clear, small cap companies versus, say, large cap or even Mag 7, but certainly small caps, they're actually constrained by high interest rates because they're the ones borrowing money, whereas Apple's corporate treasury is shoving billions of dollars into T-bills, right? They're making money at a very basic level, whereas small caps are constrained because they have high borrowing costs. And so if we're already seeing at least estimates that the second quarter is going to be the first growth quarter for earnings for the other 493, plus on a technical level, I don't have the chart to share with you guys, there's a huge breakout in Russell.
Massive.
And massive breakout. And it's what a classic, what they call a gap and go, because a lot of people, myself included, like to see gaps get filled. This is one of those where it's just going to run. And it has a lot to do with interest rate sensitivity of small caps.
Something interesting there to add is on rates, there's a lot of concern as well on commercial real estate. Has been the case for 2 years. Again, one of these deafening narratives, like people thinking this is enough to basically tank everything, and companies doing commercial real estate, they get funding on the short end of the curve up to say 3 years. So even in a scenario of a steepening yield curve where basically, let's say short rates go down, long rates go up, that's long rates going up is bad for residential mortgages, and short rates going down is good for commercial real estate. So we may be at the beginning of seeing a trend change on that part of the world.
Yeah, I mean, you have two options here, right? Either the ones that were leading the Magnificent Seven with you, Will, they either, I mean, you usually have some sort of emergency mean, so either they collapse and fall down to everything else, or this is my view, or you kind of see what we're seeing right now, which is where everything else kind of starts to catch up a little bit and show some market breadth. And I guess we'll know in the next few months or how that actually plays out. Before we move on to Bitcoin, let's do a quick prediction going back to Ethereum real quick. So Bitcoin ETFs took in about 15 billion in their first 6 months. We'll go to you first, Jack. If you had to put a number on that, my one number to throw out there is that Ethereum is roughly a third the size of Bitcoin. What percentage of 15 billion do you think that Ethereum ETFs will get in their first 6 months? And I'll give you some other numbers. So Bitwise threw out an estimate. They said 15 billion in the first 18 months. And then Galaxy Research, our friends over there, are staying. They think 25 to 50% of the numbers that Bitcoin ETFs have done. So, Jack, just throw out a number, a percentage, or a dollar amount. What do you think the Bitcoin ETFs are going to do in, I don't know, the first 6 months or so?
It's
Ethereum ETF.
Ethereum
Sorry.
ETF. Yeah, I'd say in the first, I'd say slightly, if the ratio, holds, I'd say slightly below. So anywhere from 1 to 2 billion in the first 6 months seems right. I think a lot of these groups, I'm not sure, James, you know better than myself about how the seeding of these ETFs works from the issuers themselves, how much they seed it with, and whether that counts towards the total. But it seems like, slightly less on a percentage basis than Bitcoin would be normal, because it has less brand awareness. It's the second horse and doesn't have staking rewards, et cetera, et cetera. But that's just, a shot in the dark guess.
Joe?
I think we'll do about 20%.
I'm in the same. That's my number. 20% is my base case. I'm 20 to 25. My boss, Balchunas, is a little lower at 15. Kruger, Alex, what do you think?
20 to 30.
Okay.
Yeah.
We're all pretty much in agreement here.
Which is good,
Yeah, I mean, I hear a lot of people like screaming, like, why won't this be more? Why won't this be the Bitcoin ETFs? The one thing I would say is, one, Bitcoin ETFs, the biggest launch of all time. I mean, even 20% is about 3 billion, right? That still would be an absolutely massively successful ETF launch as a group, potentially the second best ETF launch I've ever seen. So we're still talking about like stuff hitting home runs, just like people, if I think I got accustomed to the Bitcoin. The one positive I will say is I don't think we're going to see the same level of selling in ETHE that we saw for GBTC. So ETHE and Grayscale are working on their mini Ethereum trust, which it basically is going to spin out 10% of ETHE into this trust. We don't know the fees yet. It's going to be really low, and I think it could happen like right around when these things actually launch. So it could be coming next week, because basically they have a record date for when these things would be spun off as of, I think, today or sometime this week. So it looks like they're going to launch their ETH mini trust, and they learned from the mistakes of GBTC. So we'll see where they go with fees on that front. But there's also just not the level of like bankruptcies that are stuck. We don't have one estate with like $2 billion in ETH like we did for GBTC that are going to dump and go to cash and distribute to shareholders like we have with FTX and a few others. So there are like some nuanced positive catalysts, but as Jack kind of hinted at, like if you're giving up a 3% yield on staking, that's almost like having a 3% fee. And who the hell wants to do that? And the only people I think would want to do that are people who literally just don't have the ability or are not allowed to access the thing directly.
Yeah, there's $400 billion market cap for Ethereum. So 1% of that would be 4 billion. So, probably your 3 billion prediction, guys, is more reasonable than mine at 1 to 2 in the first 6 months.
Yeah, I mean, ETHE specifically, Grayscale's product is around 9 billion in assets right now, before it converts. So we'll see what that looks like. Ironically, with GBTC, they lost like almost 50% of their assets, but or I should say their shares, because their assets are higher than when they actually converted because Bitcoin has rallied so much. All right, yeah. Anyone anything to add on ETH before we move on to Bitcoin real quick?
Well, I'm just saying, I think we should move on to the Bitcoin selling, because you mentioned no one's going to really be dumping ETHE, but they have been dumping Bitcoin. Alex, I know this is near and dear to your heart. You kind of touched on it earlier. What's your latest take on Germany, Mt. Gox, Genesis, you name it?
Well, Germany's done. Gox is about 15 billion. Of the 15 billion, say, of the 15 billion, only I think is nine get distributed early. And of those 9, let's say 30% get sold. But they get sold through time. So we don't really know how much is going to get sold. Secondly, it's not all at once. So it's going to be spread out. So I really don't think we're going to see anything like what we experienced with Germany. Of course, I have to say, full disclosure, the Germany thing caught me by surprise. But I don't see that happening again. I think that what we just saw is a trend change, a major trend change, and we just continue higher.
Yeah, I'll add to that with the German selling. I mean, of course they do it in thin order books on like holiday extended weekend, just brutal for holders. But I think this is also part of the reason why trying to time this stuff at a very micro level is very difficult, because if, for example, you were waiting for it to get to 50K, which I saw some people clamoring for, well, oops, we're trading almost 64K today. And instead of just, wearing the P&L and recognizing that, there's going to be pullbacks in these markets, these order books are super thin, even though it did, break below 60 and held down there, man, in hindsight, it's going to look like a really great opportunity to have remained long or gotten longer. And I also think that there's still going to be more things that are always going to be coming. I was talking with my trading partner about this, and he's like, "Man, once the Germany thing and the Gox thing is done, there's no supply overhang." I'm like, "There's always something." And the next thing is the Genesis selling. So Genesis Trading has a few yards of Bitcoin. One thing that I think is that I learned today actually about that is that those distributions are actually in kind. So they don't actually have to dump those on the market, but people are rightfully shell-shocked from what happened with the German government selling and the Gox news, where they see a headline like that and they're like, oh shit, here we go again, right? I don't think it's going to be as impactful. So I do think, to Alex's point, big trend change. Some of this other stuff I think is more manageable with respect to the way that this Bitcoin supply hits the market, particularly the Gox stuff. And I don't think the Genesis thing is going to be as serious as the folks on crypto Twitter want to make it out to be.
Sorry, guys. Just one quick thing here is like on the numbers I mentioned earlier. So this is something I wrote. What was it, like 9 days ago? Basically, Gox has 141K coins, Bitcoins to distribute. Of those, 95K going to be distributed within 90 days. Which are basically going to those who elected to receive an early distribution with a 10% haircut. Out of those 95K, 20K are going to credit funds, 10K are going to a New Zealand exchange that is entangled in its own bankruptcy process, so it won't hit the market. 65K going to the individual creditors. So that's 85K within 90 days. Let's say 30% gets sold. That's 25.5%. That's about the same as Germany, but spread through time. So that's yep. Why I think, it's important to be aware of this. If you're trading short term, you definitely can make very good money by watching the mempool and trading alerts 100%. But I would be very surprised if this actually changes the trend and we go down rather than up.
What do you think is next for Bitcoin here, given all the conversations around government selling and Gox, et cetera?
Yeah, I think really the past couple of months it was just making sure that the bull market it wasn't over, and the past three days has shown us that it's not, that we're still somewhere in this range. And so people, I think, should take solace in that and feel comfortable. And as you said, Bitcoin's even performing in line with projects like Solana and Telegram the past week. So there's clearly a lot of larger pools of capital that are still attracted to bidding it in the 50K range. If Trump does become the next president, I think that's it's hard to underestimate how positive that would be for Bitcoin and crypto at large.
I'll actually take the under on Alex's numbers because I feel like, one, it's laughable that they're calling it early distribution, considering the bankruptcy started a decade ago. People at Gemini already got their money out. That was like a year ago. I mean, FTX is almost done. Early is just laughable there. But also, like, those people had plenty of time to sell out. There was plenty of different funds out there willing to buy at discounts. So if they didn't want to get their Bitcoin back, they could have taken cash like long ago. So I think honestly, your numbers are probably a little high in my personal opinion, but who the hell knows? I guess we'll know in the next few months. But yeah, I just wanted to throw that in there real quick.
Yeah. I mean, the thing I was going to add to what Jack was saying is to go full circle back to politics, and we can't avoid it because it is directly associated with what's happening with Bitcoin and crypto. If Trump actually does end up getting reelected, which it seems likely that he will, we've seen some rumors out of China about unbanning Bitcoin and crypto. And this is kind of Jedi mind trick 4D chess if you want, but the Biden administration, for whatever it's worth, has done a pretty good job of what's the word I'm looking for to be diplomatic? Kneecapping China from a trade and economic standpoint. And it would almost be, poetic for Xi sorry. I always mispronounce his name because my Chinese is terrible. For him to actually come out and be pro crypto, kind of as a wink and a nod to Trump. Now, I am very much tinfoil hatting this right now. Like, I'm not suggesting this is actually the case, but if you look at the Biden's effect on China's economy, it's been pretty impressive what they've been able to pull off. And it's not crazy to think that if he wants to align himself with Trump now or now-ish, maybe this is a wedge into that could also potentially accelerate and reignite some of their economic woes within the country.
Or it's just back to the game theory of different countries adopting crypto, where if US is now suddenly pro-growth, pro-innovation, pro-crypto, it would be they need to compete basically a little bit more than just an outright ban on trading it or buying and selling it. And it would be a way for them to just stay basically in the game if we're going to be reshoring in the US, a lot of innovation and capital that's been driven to offshore exchanges and talent that's been driven to overseas territories.
Yeah, right now it's mostly just rumors. I saw David Bailey, who's the CEO of Bitcoin Magazine, talking about it today on Twitter, saying that he thinks Bitcoin trading in Chinese currencies is going to be unbanned in the Q4 of this year, maybe early next year. Novogratz was tweeting about it. So this is a rumor that's going around, but I haven't seen any really truly substantiated facts about this happening. But obviously it's interesting for all the reasons that Joe just mentioned. Alex, do you have any comments on this before we wrap up?
Not going to happen. But if it happens, we go in a single 4-hour candle to 200. No, we've been saying remember what was the G candle of 2019? We went from what was it, 7.5K to 11K in a matter of hours. That was beautiful.
Yeah, well, Alex, you just got to believe, man. You got to start manifesting.
Speaking of believing, I'm surprised it didn't even come up at all. For those that don't know, Alex is Argentinian, and he Argentina just won the Copa America last night. So congratulations, Alex. I'm sure you were up watching it.
Thank you. I was screaming out of my lungs. Trust me. Yeah.
Did you watch it at home, or were you at a bar when they scored that 112th minute goal or whatever it was?
Yeah, I was at a bar. I wanted to go to Miami actually, but it was a very long trip for just a few hours in and out. So yeah, it was epic. Yeah, we now have 2 back-to-back Copa Americas with a World Cup in between. It's one of 2 teams who's ever done it in history. Yeah,
amazing.
Congrats. Well, we're going to wrap it up now. Thanks for joining us for this episode of Bits and Bips. We'll be back in 2 weeks to discuss more about how the worlds of crypto and macro are colliding. Till then, talk soon.
Thank you, guys. Talk soon. Cheers.
You got it.
Thanks.